Today's video is part of my long distance real estate investing series. In this video, I'm going to walk you through my thought process when we were searching for a new long distance real estate market to invest in. Welcome back, fam. Jacksonville Jaguars won this weekend. All is right in the world. I wish everyone could be as happy as I am right now. I decided that I'm gonna wear this shirt for my first video after every Jaguars victory. So I may not get very many opportunities to wear it. We'll see. So like I said, this video is going to be about the process that I went through when we were searching for a new market to invest in. This is back in 2016, and because of my wife, some properties she had purchased when she lived in other cities, we had one property in Tampa, one property in Washington, D.C., but the rest of our personal holdings and our entire company's portfolio was located in Jacksonville, Florida. And so after going through a third hurricane season in Jacksonville, we decided, all right, it's time to put some of our company's investment, some of our partners' investment into a new market. Now, my perspective is as an investor living in America, investing in America. So if that's not you, then some of this will look a little different for you. However, I think a lot of the points that we touch on today will still apply. So when I look back on my search for a new market, it breaks down into 3 phases. The first phase got us from a few hundred options down to about a dozen. The second phase got us from a dozen to just a handful. Actually, in our case, it was just 2. And then the third phase got us from those 2 finalists to our eventual market. So if you're a numbers geek like me, phase 1 is your time to shine. Whip out those spreadsheets. This is a high level, very macro, broad data analysis. Obviously, I wanted a metro area that was trending up. And so I looked at several key performance indicators: year-over-year job growth, year-over-year population growth, year-over-year income growth, and the current unemployment rate. So for jobs numbers, unemployment, and average income, the Bureau of Labor Statistics releases updates every month. And for population growth numbers, you can find new estimates from the Census Bureau released annually. You might also want to look at historical data for real estate value growth by market. I did look at that a little bit, and you can find that in places like Realtor.com and Redfin, and websites like that sometimes provide this type of market analysis, and the National Association of Realtors also does. However, I wouldn't put too much weight on this because to me it's more of a lagging indicator. So anyways, I did not create a formula with my spreadsheet to kind of take the data and spit out the top 10. What I did was just sort of look at each list and cross-reference them and see which cities seem to perform well across the board. Because you're not trying to use this data to then find the number 1 best market for you to invest in. It's more like an elimination of the markets that you don't need to look at so that you can move on. So still in phase 1, I shifted from the broad analysis of markets to consider what was most aligned with my personal real estate strategy and comfort level. And we're still looking at this from a very high level macro view. Basically, are you looking more for cash flow or more for appreciation? And also, what kind of price points are you considering? So for us, I was looking to continue doing what we had been doing. And so I wanted cash flow that was above the 1% rule. And I was also looking at price points around 100K. So like under 110 or 120,000 US dollars. And so while I started with the 200 largest metropolitan statistical areas in the country, after analyzing the data and also narrowing down my focus based on the expected price points and cash flow, we ended up with about a dozen options. So phase 2 I kind of see as a tiebreaker round. There are a lot of personal details and preferences that might push you towards certain cities and away from others. For example, geographically, for us living in Florida, one of the reasons we wanted to invest in a new market was to get away from hurricanes. And so I had a couple markets in Florida that were in the sort of final dozen. It made a lot more sense to not invest in another Florida city. Now that said, I also didn't want to invest too far away from Florida. I wanted to be able to get to my properties without having to fly across the country. I wanted to be able to take non-stop flights if possible, or to drive within a comfortable day's drive away. So I really just eliminated the entire western half of the country, and the fact that I wanted to be able to fly there nonstop from Jacksonville, Florida, which is where we lived at the time, really narrowed down my options. So other personal things to consider are your own network, where people that you know well and that you trust live, especially if there are any professional personal connections that you have with a certain market. That would obviously help a lot. Any cities where you yourself have personal knowledge, first-hand experience from visiting or from living previously, or if there's a particular city that you just like a lot and want to visit more, that's certainly a factor to consider. At this point, I'd also suggest looking at the property taxes, insurance rates, and the laws and regulations for landlords, because some cities are really much better than others. And if you really like to invest in a particular type of property, then go ahead and start looking at what kind of inventory is available for those property types. And hopefully once you're done with all of this and the dust settles, you're left with just a few final cities. Like I said, for us at the end of this phase, we were really down to just two cities, and that was Atlanta, Georgia, and Indianapolis, Indiana. And so at this stage, I started just building my team. I think if you're down to just 2 or 3 cities, like we were, you can really have the mindset that you're investing in these finalist cities. Now, I'm not saying that you need to actually invest in multiple markets, but you just proceed like you're going to. So I hit the ground making connections, talking to wholesalers, talking to realtors, property managers. You might also even reach out to contractors and turnkey companies as well. Turnkey companies can be an excellent resource for long distance investors. Their job is to do all of the work, sourcing properties, rehabbing properties, getting them ready to rent, sometimes actually renting them out, and managing the property. They basically do everything that needs to be done so that an investor can have a fully passive investment experience. I may do another video to really dig in deep into what turnkey companies do and how you can find a good one, but for now I'll just leave it at that. A turnkey company, if you reach out, they'll be more than happy to share with you what they do and what they know about their market. So in addition to building your team, you can go ahead and start analyzing the neighborhoods, the streets, and actual property listings so that you get comfortable with the prices and the inventory that's available. I mean, for me personally, this is my favorite thing to do. I love to analyze cities, look at up and coming neighborhoods. I do this with cities all over the country. And so I started researching on a couple dozen neighborhoods in both Indianapolis and in Atlanta, and just getting a feel for what they look like, the vibe, and what to expect with properties. And so when I said actually act like you're gonna invest, I did, and I actually started making offers on properties in Atlanta. There were a number of listings that I was interested in, and so we moved forward. But none of our offers were accepted. And then I found a few listings in Indianapolis, which I made an offer on, and we got those. And so in the end, fate made the decision for us. I was perfectly happy going either way, but when we got the 3 properties that we offered on in Indianapolis, that became our new market. Something that turned out really great about Indy was that a lot of the popular neighborhoods to invest in were very analogous to the neighborhoods that we were investing in Jacksonville. So it really was sort of like an extension of our current business operations. I was very comfortable with those price points, with the rental yields, just the expectation of decent appreciation. Indianapolis has continued to show strong population and economic growth, and I could not be happier. Well, unless you were to smash that like button and subscribe. As always, guys, if you have any questions or corrections, please leave a comment down below, and I will see you next time. Go Jags! Thank you so much for watching. Now here's a little bonus magic trick for you. If you smash that like button, I will disappear. Watch. Go ahead, try it.